Hey, good morning, everybody. Morning, Infinity, Goose, Otaro, Imoku, Don, Michael, Harry, Donald, Nikki, Mary, quite contrary, Larry, Mary, Larry, Mary, Larry, Harry. Love it, love it. The rhyming and the alliteration that happens in the chat. I know you all don't plan it; it just happens. Like it's funny. Amuses me. Anyway, Valerie, good morning, everybody. It's not that your names; it's just the way that they group up. It's kind of like my engineering business. We always talk about the weird patterns that happen. We get clients with the same name. We'll get like three Michaels all of a sudden, and everybody with a active project that we got to focus on, like Mike. Three Mikes or Michaels or whatever. There'll be three Allens or three or four, and then also a weird thing is like we work all over, you know, typically we work all over the local area, East Tennessee, and we'll get two projects in the same subdivision that's like 30 minutes away, like all of a sudden, like unrelated, not even from the same builder or anything like that. That it just, or they're adjacent subdivisions, like a 30-minute drive away. And it's just weird. Like it, they come in clusters, and it's weird. Or we'll get two retaining wall jobs, unrelated, different clients at the same time, and it's like, man, what? How do they happen? Anyway, hey Shane, good morning, Brian, Darren, Maurizio, Francois. If you want to chat with me, like all these fine folks chatting on the stream, all you gotta do, click the link right over here, the little green button, be a subscriber to the channel, and you know what? A few seconds later, you can chat, you can talk to everybody. And if I'm no longer live, though, it only works when I'm live. If I'm no longer live, you got to leave a comment down below if you want to talk to me or anybody else that leaves a comment. Give me a thumbs up if I say anything today that you like or agree with or don't like, or I mean, you can give me a thumbs down if you want. Just interact with the video. Give me, interact with the live chat. Interact. The more you interact, the bigger this thing does. We had the 30 minutes of awesome video blew up. Like there's like 800 views on that thing now. Typically we get about 3 to 500. 800 was like, I was like, whoa, that's pretty cool. So not sure where the extra views came from, but I appreciate everybody interacting and sharing and all the things. So awesome. Anyway, we have Thanksgiving. Hope everybody had a wonderful Thanksgiving. Spent some time with family, or you have plans to this weekend. We had part one and part two. We had lunch with Kimberly's mom, and then we had and sister, and then we had dinner with my family, and it's pretty good. We had a honey baked ham for lunch. I made these steakhouse rolls that were I made them sub style. Like if you've been to Outback, you kind of seen the rolls. I made some rolls that were kind of like that, and brown and sweet and all that good stuff went well with the honey baked ham, and then the one from this week, the one from Tuesday. So that's the one that kind of blew up. I was surprised. And then I made the same rolls, but in roll form for dinner, and we had a smoked turkey. So smoked the turkey all day, and then that was pretty tasty. So had lunch of honey baked ham sandwiches, and then dinner of turkey. So kind of like traditional, but non-traditional, I guess you might say. Glad to have everybody. Now, on to the main event for today, right? What's moving, what's happening, what's not happening, maybe. I brought a chart, and for whatever reason, it's not up, so I need to bring it over and zoom it up and share it right here. So check it out. These are CTAs. This is the S&P 500. This is the 1 month conditional projection here. All right. This is interesting. All right. These are computerized trading algorithms, CTAs, not commodities trading advisors or whatever you might else hear. When I say CTAs, I'm usually talking about the algos, the computers, the automated trading. This is not people controlling them. All right. Usually when we get up in this area, we see some big cells. All right. So we're kind of in this area. We may see a little pop up here, and then there's the potential for down big. Yeah, this is a statistical model, right? So flat market down, up small, kind of drifts up, like kind of arc off. Even the up big doesn't result in much more buying. Down small results in a sizable selling, and down big results in big selling. So this is kind of, the algos are kind of up full. They've kind of bought as much as they're going to buy, and we might see some selling here. Like if we get a pullback, it could exasperate with the algos. Now, it depends on how you look at it, but a lot of the trading, like the trades that happen are algo trading. The volume pushed is going to be short-term trades. These are algo positionings that hold. These are algos that hold a little longer term, and we could possibly see. This is billions of dollars here. We could see us drop back. This is net positioning and into December. All right. So we have a little bit. We already saw this little pop, I think, this week. Now, more muted as we flow into December, possibly correcting. So this is it's interesting here. So we'll see what happens. And lots of alerts. Today, the list was not very big. Not very big at all. And yes, it's just kind of floating along, up $1 or up a point, however you want to look at it. It's been up a little, been down a little, just kind of humming in here off the high. I mean, not a lot happening. We do have an early close. It closes at 1 p.m. Eastern. So adjust that for where you live. And remember that all trading involves a substantial risk of loss. If you're not prepared for losses, don't trade. Past performance, not necessarily indicative of future results. So just because I got stuff right before, my systems got stuff right before, doesn't mean I'll ever get anything right ever again. This presentation is intended to be informational, educational, fun, and entertaining. All right. It is not a recommendation to buy or sell any financial instrument or anything else. Don't buy stocks, don't buy options, don't buy futures, don't buy Forex, don't buy cryptos, don't buy bonds, don't sell them. Don't short them, don't long them, don't trade them. If you don't have a system, right? I mean, don't trade them, period. Like if you're not prepared for the risk, there's a substantial risk of loss. And if you desire personal financial advice, even though we've debated this ad nauseum, you got to hire and consult a financial advisor that has a fiduciary duty and is certified to give you advice. That's not me. I'm just kind of a dude that's had some success. And I mean, I get a few things right occasionally. So anyway, glad to have everybody. Good morning. Good morning. Good morning. Swinburne, Alan, Beth, JB, Philip, Val, Rick. Good morning, everybody. How's everybody doing? Anybody got a funny story you want to type out? I mean, love to hear from you. If you don't want to tell me here, you can tell me in Discord if you anything crazy happening. I bought a electric fly swatter. We had a little bit of moth problem. Believe it or not, moths like oatmeal, or at least these little bitty teeny moths that we got. They ate through the paper packages. We had bought a box of oatmeal from Sam's Club. It's probably way expired. It was sitting in the bottom of the pantry, covered up. And I guess the moths got in there, ate through the paper packs on like hundreds of packs of oatmeal. It just been forgotten about in the bottom of the pantry. And all of a sudden there were hundreds of these little bitty moths. So I bought this electric fly swatter, like lithium powered, called Zap It. Has like 3 layers of mesh. And I was crushing. I had to recharge it 4 times in the last 2 days. I was just crushing these moths. My son yesterday, he's like, I wake up at 6 in the morning to like machine gun fire in the house. It was pretty funny. I was up putting the turkey on, got to get it in the smoker. So it's not this thing like this one I bought. It's like 4,000 volts or something like that. I can post a link in Amazon or to Amazon and later if anybody's interested. But it was definitely zapping the crap out of in a dark room. It looks like lightning bolts coming out of this thing. It's it takes care of the bugs. It definitely takes care of the bugs. And it's like they have all these traps, like attractants and stuff like that, but it's all for like fruit flies and stuff like that, not moths. So like, what do you do to attract moths? They don't go to the lights. They don't go to the like these little guys. They like that oatmeal, but when they're not eating the oatmeal, they're all over the freaking place. I mean, they're just float around. So and Kimberly, it has whatever you call it, a moth phobia for whatever reason, and so yeah, we were zapping these suckers, and so S5FI, we are just hovering right here at 73, and I usually look at this on this chart and just right at 73. What happens if we tag 80? Might be a pullback. We were all the way down here below 20, and we get above 80, we typically experience a pullback. This is in line with those algos being overly loaded up. I guess you might say. We have done exactly what I thought we would do on this chart. If we break above, watch out for a pullback. We could come back down to 20, although I'd like to see this thing chill out a little bit and we just trend higher for a bit. Like just let's take it easy. Let's get one of these where we just kind of hum. We could arc off, hum, 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 and then get a pullback later. So let's see what we can do here. This may be reminiscent of what we had last year with the big October pullback, September, October, and then we ripped right up to the 80, and then we kind of hummed along for a while before we got the pullback into March. I'd kind of like to see that again this year, where we kind of, we did get a December pullback. Remember, last year, we did see some December pullback before we kind of stabilized a little bit. Do we get that again this year? That's the question, right? What is the pattern? Remember, we got that. It's not necessarily all rosy every December here. So we saw a rally right up through. We got a little chop there and then popped it right into the first of December. Got a little flash down, a little pop back up, and then a flash down right through kind of Christmas time, through New Year's. And then we went on a next run right there into February. So January was really strong. This is kind of like looking out. What might we have coming as we get into the last few days of November? We don't really have a lot of stuff coming right now. Earnings are basically done. We have some seasonality that usually shows we're kind of bullish-ish. I mean, let's see if I can find my seasonality. One of these charts is not like the others. Where might I have clicked on it? If I was a good scout, be prepared and all that, I probably would have had it up, but I don't. Let's see. Not that one, not that one. Man, I got a bunch of windows open. Here we go. Was this it? No, that's not seasonality. Oh, yeah, it is. Well, yes and no. We got the volatility seasonality. We can expect a little bit of chop right here heading into December. This is 20-year average, and then some plummeting. And usually we start out the first week, a lot of times we're feeling pretty good coming off of Christmas. We get some lower volatility, a little bit of rally, and then we start and ramp up the volatility. And this thing probably spikes like crazy due to COVID being in there. Typically, we see volatility spike into February and then chill out toward the end of February, and then March typically kind of volatile. Let's be honest about it. And this is 20-year average. So, and then we chill out in the summer. You know, they say sell in May and go away, sell in April maybe and go away, come back in August. That's kind of the year, the seasonality of the year. And any questions you can ask me in the chat. But I mean, it's hard to argue with that, right? Hard to argue right there. We're in a lower volatility period. The last 20 years. That's most of my trading history. Since I've been trading with real money, we typically see lower volatility into Christmas and then through New Year's. Then we get a volatility spike in February. A friend of mine calls it the, February shiz show. You may see people like Chris and Sledge and Goose talk about it. So one of my other guru friends calls it the February shiz show. Yeah. And we typically see that little bit of volatility. So we may see SVXY continue higher through that February. I mean, almost to that 98 target. Could ramp on up to 104 before we see the next pullback. I did close the rest of my position. I forgot 6 contracts. How do you forget 6 contracts? Well, when you're trading like 14, 15 accounts across all different brokers, sometimes you make a trade and you forget that you put it on, or in the heat of the moment. And I left 6 contracts going. Luckily, they made like 500% as it broke higher there. I did close it out, so I'm officially completely out of that one now. So, yeah, Valentine's Day Massacre. Yeah, I like it, Goose. And Lee, good morning. How's everybody? Chat is kind of calm here for 100 people. And XLP, I talked about that, and I looked it up on, I guess yesterday. I probably didn't comment. There's nothing there. I mean, it's like, maybe I did comment. I don't know. That is bearish. That's bearish. I mean, just straight up, that's bearish. So let's be honest about this. Like, we're below the roadmap line, and quite possibly 63 would be the target on the next breakdown through the 618. All right. S&P, today I kind of expect nothing. Most Black Fridays have been just meh. There's the possibility we get something going on, but we're kind of in this topping pattern. We need to see the S&P SPX pop this 4607 to tilt the scale bullish for the next pullback. And we may rally on through next Friday. It may just drift on up through next Friday, and then we get the pullback. So just be careful. Now, in NASDAQ, NDX, keep clicking off of the chart here. NASDAQ made a higher high. All right. I usually look at the futures, made a higher high. It's having trouble pushing on through, getting the extension, but it made a higher high. Now, I do kind of expect it to come down and retest. I mean, you see, this was resistance for a couple days, then we popped it right up to the prior breakout. We keep trying. We can consolidate here for a week or two and then pop it. Or the more efficient way to do it is just to pull back, and then we can go higher. It's just the way the market works. And I was kind of speculating that we may see a pullback over here before we can break out even higher. This could complete sort of a head and shoulders deal. kind of a crazy one at this point, getting steeper and steeper, but we could see that play out. And then the head to the neck could go out the top. And if you look at where that goes right in the moment, it'd be from up here somewhere, 5,000, which is where I thought we were going for a long time. Yeah. Yeah. Made money, got back in. Why would you get in? Why? Let's talk about this a second, John. What? I mean, you can make your own trading decision, but why would you get in to something that's approaching the top? There's no pullback there. I'm out. I'm not saying you should be out, but you could hold for the 98. The odds are we're going to see another pullback. We don't typically go. We typically rally back in that 30 to 45 days after we make the bottom, and then it can be a substantial amount of time before the next pullback. Like that one took 112 days, 77 bars, about 3 months. And then we rallied back right there. So that took 41 days. And then you compare that, 71 days. So 2 months-ish. Now, some of the other ones, it rallied back and then immediately pulled back again. Rallied back and immediately pulled back. Rallied almost back and immediately pulled back. Rallied back and pulled back. Pull that, rally back. Little extension, then pull back even bigger. That's just been the pattern of this thing since COVID. We come all the way back to here. This was the COVID drop. Rally, pull back, extend, pull back. Takes a little longer, pull back. Typically when we get to that prior high, sometimes we extend, sometimes we just immediately pull back. This has been the environment since that COVID bottom. So I got out as we approached that prior high because I didn't necessarily think we'd get a large extension. I mean, we could just keep on drifting, but odds are that we're going to pull back again. So my conservative, I tend to trade conservatively, and 98 still a 70% likely target. It's just that also expect it to pull back. So especially on the when you look at the S&P, look at this. I mean, this now we're starting to get a little red. Look at that move. There's no pullback. We did 8 green days in a row, and then we got one red, and then we're on 1, 2, 3. Well, we got a red there. 1, 2, 3. I mean, we don't typically get a ton of green days in a row, and we typically don't just go straight up with no pullbacks. So pullbacks tend to bring volatility, which SVXY, opposite volatility. I'm not urging you to close all your volatility trades, but we don't hang out at the bottom very long, typically, before the next move up. We came down pretty violently. That was a good trade. It's smart to book your profit and wait, especially on something like SVXY that can move very fast, very quickly. All right. Yeah, sounds like a good decision, John. I'm not, not telling you to do anything. It just sounds like a good decision. Just wanted a red team. I mean, anybody else has questions about that? Like, I'm just gonna wait for the next time we come down, and yeah, market closes early close 1 p.m. As I said, Beth, thanks for the reminder. We do have an early close, so if you're shopping for anything today, stock-wise, investment-wise, make sure you get it done early. Yeah, you can't go broke taking a profit. But you got to take profits all the time. If you take little profits, then you hold one too long, you hold one into a loss, and you're like, oh, remember, it's not being wrong that costs you the money. It's staying wrong. You stay wrong, and it's the big loss and wipes out all those little gains. Then you got a problem. So, I mean, hey, volatility's cheap. You buy it when it's cheap. You got to buy some time. There's not great long volatility instruments. Like a lot of people like VXX, but this is a decaying asset, right? A lot of people like this one, but look at it. It has a downtrend. It's the carry cost. This thing erodes drastically. The last reverse split it here in March, but they're gonna have to do it again here. So, and then a lot of people I know, including myself, I made a ton of money on UVXY in COVID, but this one's also a decaying asset. They reverse split it back there in June, 10 for 1. If you're trying to buy any type of long-term exposure to a pop, this thing erodes very quickly. So, and then there's all sorts of other VIX volatility derivative things, ETFs, but SVXY tends to be the only one that doesn't really decay. And it's because it's short. And it's hard to explain it all. So, yeah. Why do you want to trade the ones that just... Exactly. So, maybe the opportunity is in puts, but I would, if you're going to do a put on SVXY, just be real light, just don't go full boat. We can still drift higher into 98, possibly 104. All right. The opportunity, the better opportunity may be SVXY puts. So you can see over the long haul, this one doesn't really go anywhere. All the way back, as far as TradingView has it, back in the 90s, every pop, why do I like the SVXY thing? Look, every pop, it comes back down. So if you catch the pop with SVXY, short VIX, it's coming back down. Like this, it doesn't trend up. It has a resting heartbeat around 20. And when we're below 20, you can kind of expect that we're going to pop sometime in the not so distant future. I mean, it's almost like a heart rate, right? Heart rate of the market. There's also volatility of the volatility. We don't hang out at the bottom of this very long either. So volatility of the volatility is low. What does that tell us? It tells me that we may see some volatility in volatility, which volatility means that the market's going to do something. All right, we're going to start making some bigger moves. All right, all the little pieces come together. All right, it's a cycle. We go through lower volatility, then we go through higher volatility, then we come back down through lower volatility. But VVIX doesn't hang. I mean, this one oscillates here, right? We're down near the bottom of the range it typically parks at. I mean, look, it hadn't even been in this low area for a while. Even back here in 2019, before COVID, we're still right in the vicinity of the bottom of the range. Goose is Goose is convinced that the algos are what drives VVIX. I mean, let's be honest. Like, a lot of the computerized trading, I mean, this may be a measure of what the algos are doing. This right here. I mean, just to tie it into the bigger conversation, when we get a pop, they may start buying. When we get down here, they may start selling. This may be like an amazing indicator of what the algos are doing. Like this may be the heartbeat of the algos. It may very well. I mean, Goose has a good point. We're approaching the point where algos would probably sell. Any questions? You know, this is an interesting conversation we're having today. So, this isn't one I bring up all the time, but I do kind of, one of the news aggregators I have compares VVIX and VIX on the same chart all the time. And when they start diverging, that's usually about the time when we start getting some volatility in the market. So what I was saying was you could buy puts on SVXY. You know, you have to, that's like short volatility. So you're longing volatility, unwind that. Or you could just trade VIX. You can buy VIX, you know, these are European style calls. Probably want to go out to, I mean, we circle back the whole big conversation here. We could see a little bit of chop here. So you want to be at least in December, possibly into January. But the real volatility spike isn't probably going to happen historically till January. I mean, we see a little chop here, a little bit of late December volatility, but the bigger events are here in January, starting first week of January through the first week of February, and then we chill out a little bit. Then another one here starting mid-February into March, and then we chill out again. And this is that same heartbeat, right? Yeah, I mean, you can do all sorts of things. So you take VIX and let's go back to VVIX because it's the cleaner chart at this point. You click the little compare button right here. This is why I love TradingView so much. You can just do math. You can do all sorts of things. So we compare VIX and VVIX. Now we're getting a little spike in VVIX and volatility of the VIX. But VIX hasn't followed suit yet. It may be easier if I change this to a line chart. It depends on where you line it up, you know, obviously. Usually this correlation works on the smaller time frames. The shorter duration, I should say. So really, like you can really, I mean, you can manipulate this thing, obviously. Yeah, VVIX hangs out in its range up there. So if you're going to try to compare, you need to maybe come back to last time they were bottomed out. Right in here somewhere. Back in September, maybe. Back in July, maybe. You can see VVIX starting to climb a little bit. And we may see volatility follow suit, at least to a... Yeah, that could be the 15%. Like we could get another SVXY pullback. A 10 to 15% spike there. Spike down. That's the pattern. Like that's the one I've seen over and over and over on SVXY. Come on, work with me. You also have the future. And you can look at the front month too. BX2 exclamation point. So we're seeing even the front month expecting a decline, although we're getting a little bit of. It could be a interesting play to go long some volatility. Yeah, awesome, Ryan. You know, the Black Friday deal is still going on TradingView, and 70+% off plus a free month. I mean, it's a heck of a deal. Anybody needs that, it's like tradingview.com/black-friday, all lowers. I don't remember. I probably had it up on one of these charts here somewhere. There it is. I can copy it, paste it in the chat. Had it in the chat the other day. This is not me and doing anything that except endorsing, I guess you'd say. I don't make any money off that. I don't have a referral code. There's nothing. Maybe I should do that, but you know, hey, just you guys watching the video is good enough for me. And like and subscribe, give me a thumbs up, interact with the video, share with friends. You know, that's the thing that's what I want. All right. The list wasn't very long today, as you can see. Not much happening. I brought in NVIDIA, getting that negative reaction. Are we going to hold support right down here? Retest that downtrend, the downtrend of highs that we broke above. Do we retest it and go higher, or do we break down and come visit the roadmap line, possibly coming lower? A couple different scenarios possible. The support zone is right down here in this zone right there around that downtrend line. We may see this retrace. All right. Quite possibly. If you go to the link, do I have it up? There's the. Yeah, here we go. 70% off. Explore the offers. Yeah. They'll have a Cyber Monday offer more than likely, but right there, 70% off. So you got the 40, like for $1 more, you go from plus to premium. Why would you not do that? I mean, that's, I mean, now they'll give you an offer to buy data and all this stuff. You can see my current plan has 457 days remaining. They'll give you an offer to buy data and all that stuff. I don't do that. I just buy the platform because, I mean, I love it. I kind of like it a lot for doing the show because I can draw on this screen, and then when I go home, it's all on my laptop. Everything I drew on the show is on my laptop. I can update a chart for anybody in Discord. And if you want to get in Discord, links in the description down below. It's like $5, and just click the button to expand more information about the video, and it's right in there. Alrighty. While you're at it, make sure you're subscribed to the channel and have the bell notifications turned on. What the heck is, oh, there we go. Blocks remaining, 21,733, about 146 days left until halving. Let's circle back and talk about Bitcoin real quick. Look at this. Look at this. Look at this. We made a higher high. What? Bitcoin made a higher high. Pulling back a little bit. We typically rally on holidays. I wasn't sure about Thanksgiving. That wasn't the holiday I recalled. The things I pay attention to are the 3-day weekends, and typically it's probably greater than 70%. It's probably 80% of the time, maybe even 90% of the time. I didn't like tally it up exactly. We see Bitcoin in particular rally on 3-day weekends. We saw, and we're seeing this, this is today's candle. So we saw that higher high today, even though the market's open. Yesterday kind of just muted, today rallying. And there's so what caused this? They, us humans love stories, right? We do. What was this? This was Binance agreeing to pay a $4 billion fine to the SEC. This was, I can't even say his name. CZ are his initials. CZ resigned from Binance. He put up $150 million bail that he would come back to the United States for sentencing. He pleaded guilty to fraud, money laundering, aiding and abetting money launderers on his platform. Binance stepped down as CEO and, pleaded guilty. So it wasn't just an indictment. He pleaded guilty. And then the very next day, Grayscale had a sit-down meeting with the SEC, and they hashed out what the SEC wanted in their revised application to approve their conversion to a spot ETF. We popped right back up. Also, late that day, these guys worked fast. They resubmitted their application or their prospectus documents, their S1 documents, to the SEC before the close. So they had a sit down, got it all hammered out, resubmitted, and now we're seeing this start to run. So MSTR running, you say? Let's go check it out. Yeah, I'm long MSTR. It did the pop to the 1272. It did the retrace back to the breakout level, and I expect it to come on up. I have my alert at 580. We could see as high as this. It depends on if you're in log scale or not. Since this moves more than $50, I typically put it in log scale, which, somewhere around 580, possibly 615-ish, 600. We could see that very strong rally. When we were just below 500, I bought a 500, 620 debit call spread. It's where you buy the 500, you sell the 620 to help finance the call spread, finance the long call. Same expiration, looking for this pop. I think I bought it in April. Why April? Circling back, full scale, full cycle on this. 146 days. We go from here, 146 days. Right there is April 18th. That's approximately when we'll have halving. It keeps shifting a little bit. It keeps drifting back and forth. We're actually mining Bitcoin blocks a little faster right now. All right. I'm all over the place today. So we're also seeing Ethereum breaking out. I have a sell order at 2305. I got into a margin situation, almost had to liquidate my extra Ethereum on Friday. I resolved it a different way, and holding that for 2300 because it's the 70% likely. I'll step back out of the way, even though we may pop it to 2500. Dollar continuing to exhibit some weakness and may flush on down. It may. Yeah, and TradingView, super easy to share charts. I highly encourage you to share your charts, share your trades with other people. This is kind of how I got to where I am. It's made me a better trader. I chart up my ideas and then I share it with my group, and I do that in Discord. This button right over here, this camera, you can take a snapshot. You come down, copy the link right there. No matter what you have drawn, whatever you write, whatever you mark up on the chart, you copy that link, and you can just grab that link and share it right in Discord or on the live stream like this. Now right there, you can get a copy of my chart. Pretty cool. NVIDIA, like I said, looks like we may pull back. iRobot, nice pop. That's still bearish. We popped before, and then we went lower low. Pop again. The pattern's the pattern until it changes, all right? Until it's proven otherwise. We could go a little higher. We've got a giant gap down. That'll be support for going lower, but we could just crush right on down. ALGT, that's still bearish despite a little bit of positiveness today. It's the lowest low. We may continue lower. Baidu, I went long on the break above where I had my aggressive entry, breaking back above this orange box on not Friday, but the Wednesday that was Friday of the week. And you know, today's Friday, that is Monday and Friday and all in one with an early close. I went long Baidu with a synthetic out. Gosh, I think I went to 2025. Expecting this thing to rally right back up through. This is a measured bounce. I've had pretty good luck with the synthetics and the measured bounces and moving stuff around. We may see a rally up to this 220, possibly up here to 270. Just back up to the prior high would be pretty amazing. We line it up this way. High to low, you know, 176, 196 intermediate resistance. If we play it out the full bull case, we could rally right up to this 350 area. If this thing goes full bullish move, this is the target area right in there. Conservatively down to 260, aggressively up to 350. Pretty sweet little potential there. TMV, I shared that with I shared the more details with my Inner Circle VIP. So if you want more details on that, we have a Black Friday special going on that. And this one looks like it's going to come back and bounce off the roadmap line, which looks like it's also a 618 level from way back whenever. Update the fib. Could take us to the next higher target if we turn and burn. And it looks like it may go popping back up. Of course, we may pull this down just a little bit more where the 618 hits with this level right in there. It doesn't have to. It can just hang out right in here. Pop. That 618 falls where the gap is. I mean, that kind of makes sense. We get above the gap. Probably going higher again. If we bounce off the gap, probably coming on down lower. NTES. I wouldn't expect much more. Maybe 119 before it drops back to the roadmap line. It didn't actually touch back here. So it hadn't really been interacting with the roadmap line since back here in May. Maybe due for that to happen. NVDL, that's a leveraged long, be careful on leverage. That was popping pre-market. Now it's dropping. This is likely to come down here. NVDS is the opposite. A leverage short. Looks like we had a reverse split back in August. So this one decays would be what that tells me. Be careful. There's a carry cost involved with this. And that reverse split indicates that this thing is probably going to trend down. Then AU, Anglo Gold Ashanti, whatever. Still in kind of a downtrend there. So there was a request to look at silver. Yeah, potentially breaking out here. Potentially. But look what we're doing. We're just retesting that downtrend of highs. If we can break above, that'll be positive for going on up. Possibly 25, possibly 26, possibly even higher, loftier goals on up here around 30. I am long silver already from back here. Held through this, still long, waiting for this to pop. I'm out to 2025. Oil, not really super interesting, just churning on the line there. I probably skipped over it because found some resistance and we're just sitting here. We are technically above that downtrend line. We spiked it down. We managed to close above it on Wednesday. Today, retesting it, still holding. We break above this right here. We break above that zone and the roadmap line. You know, unfortunately, the roadmap line's sitting right above it. We break above that. Odds are we're not coming back for a while. So build your position. If you know, it's not a recommendation. If you're interested in going long oil, it's time to be shopping. Is this Black Friday shopping for oil? I'm already bought and doubled down. You know, not a big position. I bought and doubled down, and as we came back up through, have to zoom it up. Zoom key. As we came back up through, I added. It was probably on the smaller time frame. Yeah. So we dropped out and it started coming back up. I added here. Waiting. Didn't add here. Just waiting. I may wait until we break above that daily roadmap line before I add even more. My weapon of choice is a leveraged instrument. Be careful with leverage. UCO. Now, aggressive entry above 32. Conservative entry above 34.50. Kind of shows we're on the way up. Target's 30. You know, conservative target 37. Target 39. That may be my target. More aggressive target 42. Bigger picture. Aggressive target 44. And bigger picture continuation target, if we're gonna really get some continuation going, 49, possibly 57, 69, all possible, but that's gonna be much bigger picture. I'm just out to April at this point on my position, expecting probably 39. And we're likely to get some sort of pullback after we get to 39. All right. Bias for the day. Not really expecting much up or down. Just kind of drifting along in the market. We've been up, we've been down. Likely to just drift. I'll be back again on Monday, live, going through what we got happening. All right. Hope everybody has a great day. Remember, 1 p.m. close, Eastern, 1 p.m. Eastern, close. That's adjust for your time zone. Words out of my mind. Anyway, I'll be in Discord at least probably through the close. I do have a couple things I need to do this afternoon. So hope everybody has a great day. Enjoy your Black Friday. I will be back again Monday. We'll do this all again. Have a great day.